The views expressed during the broadcast are solely for entertainment purposes and do not necessarily express the views of KNTH, its management, Max Out Savings Advisors, or its sponsors. Max Out Savings Advisors and members of the Max Out Savings team may or may not hold securities mentioned during the show. Plan for your prosperity, prepare for your retirement, safeguard your savings, and nurture your investments. This is the Max Out Savings Show with Ted Gioka, a presentation of Max Out Savings Advisors. Now, here's your host from Max Out Savings Advisors, Ted Gioka.
Welcome to the Max Out Savings Show. I'm Ted Gioka, and we're talking savings, investments, and your retirement here on the Max Out Savings Show. This begins, I think, actually our 20th year on the radio. We've become one of Houston's most popular financial radio shows, by basically giving out good advice, trying to get you ahead of what's happening in the world, and trying to bring you things that other people aren't talking about, and building and helping you build up your retirement and understand the world today. Our motto and our philosophy is to save aggressively and invest conservatively. 20 years ago, we started this show, and at the time, the savings rate was some of the lowest in history, and so we're trying to figure out, what to talk about in the show, and really some of the issues in the financial world, and the savings rate just jumped out, and it's been a problem going forward, and it's improved some, but it needs to improve more. And just looking at the savings rate back then, let me just pull this up. Yeah, when we started the show, it actually back in it went down, in it hit as low as 2%, 1.4%. The early couple of months before. If you look back in the 60s, the savings rate was 10%. If you look back in the 90s, it was about 8%, and then it dropped down. Recently, it's been in the 4s, 4.5%. It spiked up during the COVID as all that money came pouring in, but it recently dropped. It's starting to drop again. It's at 4%, and really, you want to continue to save money. It's the start of the new year. Now's the time to make that resolution, to make some changes, and increase your savings rate. If you think about it, a resolution, you want to do something you can actually accomplish, and you can stick to it, and it will change your life in some form or fashion. And increasing your savings rate is a pretty simple way to do it. Prepare for retirement. Just talk to your HR person and increase it. We recommend a minimum of 10%. Plus the company match gets to 13. If you're behind, if you're in your 50s, now's the time to put away more money. The government lets you put away more money in your IRAs, your 401k plans if you're 50, because they know people start really ramping up the retirement. So now's the time to do that if you haven't. And remember, just save aggressively and invest conservatively. Now, we got a lot to talk about in the show today. I mean, it's really remarkable. But we're going to be talking some about our outlook for the new year, what's going to happen there. We sent out our most recent Max Out Savings Report. If you're not on the list, this is a free report. We've been writing the Max Out Savings Report. First one was really written in, I want to say 2001, somewhere around there. And it was right around a month or so after Ben Bernanke's famous helicopter speech, where he said, look, if the economy gets bad, we have a printing press and we can drop money from helicopters. And we said at the time, and gold, I think, was in the $200 and $300 range. We said gold was going to begin a 20-year bull market. Now, we were off. It's extended longer than that, but it's really gone up. But that was really the first really big call we made in the report, and we laid out the case of the spending, and the Fed was going to flood the system with money every time. And we talked about it over the years. 2007, we famously, late 2007, I think October, November, we predicted failures of the investment banks. I think in June of that year, we said as a perfect financial storm was coming. We laid out the case with the mortgages and homes. Then we laid out the case, and I want to say November about a failure, October, November, a failure from investment banks. We didn't just say, hey, the investment banks are fail houses. We pointed out, we put the balance sheets of the investment banks in the report. Yeah, just kind of a simplified version of it. And so you could see the growth, and we said, look, they can't keep this up. They're putting a bunch of junk in there. They're going to lose their funding, and that's what happened. So just kind of oversimplified it right there, but yeah, we talked about that when we talked about the you know this was going to be a crisis. Then we looking at during the Russia war with Ukraine, we said this is going to be inflationary. Laid out the case during COVID, late January, before anyone was even talking about COVID, we were talking about COVID first part of February. Hey, this is a severe problem. Look what's happening in China. All the doctors I talked to told me it was nothing, and so we bring a lot of really good things in the report. We sent out our most recent report, and I'm going to go over it. And again, this is a free report. Just go to maxoutsavings.com, and you can sign up for the free report. The looking at some of this, a couple things. What are we looking for 2006? We think the CapEx boom is going to continue. We're in the CapEx, and we think we're going to have a good economy this year. And so if you look at it, a couple things. You got the AI data center build out, number one. Then you have the electrical grid build out because you need electricity, number two. Then you have factories. President Trump put all these tariffs in place, and then went and talked countries into moving factories back in the U.S. to get a better tariff deal. So you have all these factories coming back. That's billions of dollars more there. Everything from drug factories to auto factories, all types of things, chemical plants. They're moving them back to the U.S. And then the fourth one you have the defense work. Right now, we depleted our munitions in the Russia-Ukraine war and the Israeli-Iran war in Gaza, and so we have to restock our munitions, everything from bullets to rifles to missiles to Patriot missile systems to howitzer shells. All of those things have got to be increased. We need more planes. We need more ships. And so defense plants are running at full blast. President Trump just this week said he'd like to increase defense spending from $1 trillion to $2 trillion. And so those are four big things: AI, electric grid build out, manufacturing, reshoring of manufacturing back to the United States, and defense work. So that's the number I've been using is $500 billion. That's a lot of buildup, and I'm seeing numbers all over the place. Some of them said 400 to 500 billion just for AI, but so the numbers could likely higher than that. Trump is claiming 2 trillion. Yeah, it's just, but understand there's a lot of capex happening now. The consumer is the biggest chunk of the economy, and so capital spending is not big, but we're shifting it over, and it's going to pick up the thing. So we think the economy is going to be good, but does that mean the markets are going to be good? And that's the tougher thing. The market's going to do good. I mean, the economy is going to do well. The consumer, they're going to get additional withholding coming up. So they had with additional withholding. They withheld last year because of the big beautiful bill. So many people are going to get big tax refunds as well. You had the shutdown last year. So a lot of the growth that happened would happen in that third quarter. It's going to happen more in the fourth and in the first quarter. So a lot of good things happening there. We're rebuilding the country. We're reshoring the manufacturing. Keep in mind, in China started in the 1990s. They started stealing our technologies. It started stealing our factories. I would get phone calls from clients. I remember the famous one was DuPont, like, Ted, hey, we put a plant in I forgot the town, and within 2 years there was an identical plant 7 miles down the road. And so they were stealing our technology. They took the jobs were the industrial Midwest was basically depopulated, deindustrialized. And China had really good growth during that time. They had virtually no recessions. It's just constant, very strong growth. well, now that we're bringing back the factories back here, why can't we get some of that growth? And that's the good thing. Now, the markets are a different story. There's a lot of a couple things. I don't think the long end of the bond market, which long-term rates is going to go down as much as people think, just because there's such a demand for money. The government's borrowing trillions of dollars. The defense companies are borrowing money. The AI companies are borrowing money. All the tech companies are borrowing. Everybody needs money to do things. And if you look in the past, over 1,000 years of history, that tends to push up interest rates, particularly on the long end, and this is going to push up inflation. So that's not good. But there's also and actually what I entitled the report was CapEx Boom and Fat Tail Risk. And fat tail risk is something on a distribution curve of risk. Look, what's the most likely thing to happen is this. What are the chances of this happening? Well, that's, maybe 50-50. What are the chances of this happening? Well, that's maybe 3% or whatever, 3 or 4% chance or 5% chance. But if that happens, that's going to really affect the markets, or that's really going to affect the economy or whatever. Well, if you look at it, if there's a 5% chance of things not going well, something bad happening, well, that's not a bad shot. I mean, I would say, look, the economy is going to do really well. The markets are going to go up. But if there's a whole bunch of fat tail risk, then you got a problem. Will the long-term interest rates go up? Will we have some type of issue will Russia and Ukraine war spread? Will the war with Israel and Iran cause additional problems? Will China invade Taiwan? Will the Supreme Court negate the tariffs? Will the inflation start taking off as the price of electricity goes up, as the price of DRAMs, goes up, which is dynamic random access memory, that goes in everything in AI centers. They're trying to get their hands on everything they can get a hold of. I heard some really interesting stories on that. Well, keep in mind that goes in your computer, that goes in your automobile, that goes in your telephone. So will inflation come up? What else? We have a new Federal Reserve chairman coming up. If you look at that, people forget Alan Greenspan came in August of 1987. The market crashed in October. In 2015, Janet Yellen came in, and 4 months later, the Chinese market collapsed, stock market collapsed, and then within days after that, the U.S. market fell 15%. And so there's all these potential problems out there. I mean, these war drums, as we write about in our report, and we've been talking about the Russia-Ukraine war, and we said at the time, look, you've got to solve this. You have to solve it quickly. There's a danger it could spread. And sure enough, there's a danger they could use nuclear weapons or something, and it keeps getting worse. That the war talk, if you 5 years ago, if you talk to senior military people, they'll all be saying, look, by 2026, Xi Jinping wants to be ready to invade Taiwan. And that's, we're expecting 26, maybe 27, something's going to happen. Well, here we are right now. Does anybody think relations in China are going well? And if you're China, you're watching what Trump just did in Venezuela. You're thinking, well, why can't I pull that off in Taiwan? And so I think the odds of this potential, these black swans out there, there's a number of them, and they're all probably 5%. But if you got 5 or 6, 5%, so your percentage of something happen is a lot bigger than 5%, something negative. And so for this reason, in addition, the valuations are very, very high on the markets, and the concentration is very high. So all of these things are adding up to a questionable stock market, but a lot of opportunities, because as we just talked about at the start of it, this is going to be a very good year, should be a very good year for the economy. So there will be opportunities in certain sectors of the market. But at the same time, you want to manage your risk for retirement with all these potential problems. So let's take a quick break and be right back right here on the Max Out Savings Show.
The Max Out Savings Show with Ted Gioka is taking your calls now at 713-339-1070. Ted Gioka will return after these messages.
This is Ted Gioka, host of the Max Out Savings Show, one of Houston's most popular financial radio shows, celebrating over a decade on the air in Houston, Texas. With stocks at record high valuations and interest rates near record lows, you need to have your guard up. You need to have a plan to manage risk to your retirement. Do you? At Max Out Savings Advisors, we have a risk-based value investing approach to your retirement. If you would like some help managing your retirement, go to maxoutsavings.com to set up an appointment. That's maxoutsavings.com.
I'm Sam Malone, president of 512 New Media. We're Houston's leading marketing and content creation firm for many reasons. Our assets are exceptional, from video production to web design, strategy, and the ability to say no. Saying no is integral in launching a successful, profitable campaign. For example, take a look at Memorial Day. It's a federal holiday set aside to honor and mourn those in our U.S. military who died while serving our country. I'll say it again, for those who died while serving our country. Look, we know people will be at the beach and barbecuing and having parties. We would probably say no to launching a Memorial Day sale. So is there another way to commemorate the day while marketing your brand? Absolutely. And from our experience, the same holds true with Easter Day sales and MLK Day sales and Christmas Day sales. That's why we're different. No cookie cutter, follow the crowd, template marketing. Let's talk. We're 512 New Media. 512 New Media. With better marketing comes better value, creating better results.
I'm Ted Gioka, and I approve this message.
Inflation, instability of the market, bonds, precious metals, oil and gas, and lack of old-fashioned cash puts your retirement at risk. It takes a different type of portfolio to deal with these issues, and that's where Ted Gioka can come in, and he can help. Go to maxoutsavings.com and schedule some time with Ted. That's maxoutsavings.com. And listen to the Max Out Savings Show every Saturday at 10 a.m. on AM 1070 and FM 103.3. The Answer.
Once again, here's your host for the Max Out Savings Show, Ted Gioka.
Welcome back to the Max Out Savings Show. I'm Ted Gioka. We're talking savings investments in your retirement. We're just talking about, kind of our outlook, what the thinking is for the new year, some other interesting things out there. The economy, we had a number come out on the Atlanta GDP Now number came out, and it reported they're expecting the latest GDP number to come in at over 5%. And what's happening is there's been a big drop of imports. And so the growth has happened in the and exports have gone up. So the latest number just came out was 5.1%, and so which again gives a pretty good idea of what of the type of potential growth we're expecting. Yeah. So this is something. Yeah.
I've got a question.
Oh, sure. Go ahead.
Oh, is this Ted?
Yeah, this is Ted. Yeah, you're
okay.
on. Okay.
Okay, fine, Ted. This is Charles. I just had a question about what your thoughts were on this Greenland situation in terms of I understand the military implications of this, but are there any rare mineral reasons why we would consider that particular area?
Yeah, there are the rare earth minerals. There's a lot of minerals up there. There's gold, there's silver, there's rare earths. And that's just around the edge because much of it's buried under a mile of ice. And so there must be a lot up there. I think it's mostly the military. Keep in mind that Greenland it's around the submarine lanes going in and out of the Arctic. It's the fastest way over the poles for Russian missiles to come in, or even Chinese,
right.
and particularly Russian. So we want that. I mean, I think it's a tough thing because you're kind of like, why are we doing this now? I mean, I think there's better, fish to fry, so to speak. But It is. If you look long term, we need to control that. Particularly if Europe appears to be destabilized, and so you never know who gets in power over there, and all of a sudden they have a socialist or a communist country in Denmark, or a Muslim caliphate. I mean, honestly, that's not even that big of a reach way they're pouring people in over there. And so the question is, can you allow this to happen? And one of the things that they appear to be going back to the Monroe Doctrine, because one thing the United States has been brilliant at doing over the last 250 years is keeping the wars out of the country and away from the United States. I mean, we fought wars in Vietnam, we fought them in Korea, we fought them in Europe, we fought them in Asia, but they've never been here because we've kept our enemies away from us. And so I think that's what they're looking at. I think the same thing with I think Venezuela. As far as the oil, I think the only thing they care about the oil is they don't want China getting the oil and controlling it down there. But again, it's all about the Monroe Doctrine of we can't have Chinese and Russian influence right up against our borders or close to our borders. And I think that's what this is all about more than anything.
So in other words, really reaching an agreement with the Greenlanders or whatever probably wouldn't be sufficient, because if push comes to shove, I guess the question would then become, as you say, if these people end up tending to be moving towards a socialist bent or something, then we wouldn't have much to stand on as opposed to just owning it outright, is what you're
well,
saying.
what you could do is possibly they could sit there and give us 100-year exclusive defense pact, and no one else is allowed up there but us, and we have the use of the military. You
Right.
could see something like that.
Uh-huh.
That's it. So it is. So if you get some communist government come in there and they try to take it back, we say, I'm sorry, we have this, and then we
Right.
we have legal rights to it.
And just one quick question: what are your thoughts on the oil discoveries that are taking place in Suriname? I know Total and Apache and a few of the others are working in that area, and apparently it seems like it might be significant. What are your thoughts on that?
I think it's very, very good. Full disclosure, we actually own Apache. That's starting up in 2028, 27 in that area. They're going to get 100,000 barrels. I think they have other discoveries in there. I'm not convinced it's quite as good as Guyana, but keep in mind, if it's even close to Guyana, which is the biggest discoveries of this century so far, really, and it's just absolutely massive discovery in Ghana, and it's right on the fairway, and they have a number of other wells going down, other projects they're doing. So I like it. I think that's a real opportunity, and Apache is in there, Total and some other ones. Apache has a carry actually on that, with not a carry, but Total's paying for their build out, and so I like that.
Yeah.
One other point, we like energy, this oil and gas, particularly natural gas, but the thinking being is oil and gas really, if you adjust them for inflation, are just ridiculously cheap. I mean, President Trump met with the American oil industry, and they weren't just chomping at the bit to get into Venezuela. They said, look, it's kind of unsafe. We need to see. But the other reason is there's a lot of oil out there right now, and so no one really wants a tremendous amount of oil. My thinking is, if anything breaks with Iran, the Middle East, or Russia, where things go badly, or China, oil is going to shoot up. I think it's cheap right now. I think most of the big companies are cutting back exploration. They're cutting back drilling, and they're just maximizing cash flow. So I'm not in oil's going to $40 camp, because we just talked about that Atlanta GDP numbers at 5%. Now, I don't know if it's going to get there, but I do believe we're going to have a good economy. So I struggle to see how oil goes down to $40 in a good economy like that. That means that we have a recession that's going to basically zero, which only time that's ever happened was when they shut down the entire country. And so I do like the oil and gas sector over, particularly natural gas. Natural gas is trading in the same range it's traded in for 30 years and run any type of inflation number on it. And it's just ridiculously cheap, and they need it to produce electricity for AI in the expansion of the grid.
Right. Okay, Ted.
Good,
all right. Thanks.
Good call, Charles. Hey, I appreciate it.
Bye-bye.
You know, I ended upon that a little bit, but I do think Venezuela, again, I think it was the right thing to do. If China invades Taiwan, we can't have them sitting down stirring up trouble in Venezuela. We've got to stabilize that right away. And I think it's interesting. Trump is trying to work with the existing people there, basically saying, look, you're going to have to hold elections, but there's not going to be any recriminations. We're going to try to rebuild things. And actually talking to the socialists, well, you guys want socialism, but you need to get money from somewhere. And if you run your oil down where you got no money, you're stuck. So it hasn't really worked out for you. And candidly, you can even point to China or some other. They've done real well over there. Why haven't you guys done well here? Because you didn't plan. And so I think it's an opportunity. I think he's trying to be as prudent as possible. I think one of the other big trends, and I didn't write about this as much in the report, but is I really think we're going to see. I think. Look, we have a congressional election coming up. That is the big driver for this year. In many cases, the Republicans have to control the House and the Senate. Otherwise, they're going to want to impeach everybody. There's going to be constant impeachment. It's going to be just a complete disaster. And so they're getting the economy. It's in good shape. But Trump is really trying to build out industry to get the economy going. But he's kind of gotten a reputation as basically a friend of the billionaires. And you don't want people in this country are suffering. You've got a K-shaped economy, which simply means the market's doing well. So if you've got a big 401k plan or something, or a lot of assets, you're doing super great. But if you don't have a lot of assets, if you're a younger person starting out, everything's expensive and it's a tougher situation. So he's going to have to. We said he's going to pivot, and he's pivoting already. He's making tough changes. He's doing what he can to control drug prices. He's working with the weight loss drugs. He came out earlier this week and he made a comment that defense manufacturers shouldn't make more than $5 million for the executive, which is still a lot of money, but a lot less than we're making. You shouldn't be buying back stock and you couldn't be paid dividends. Look, he wants the defense industry to build things cheaper and quicker and quit concentrating on the short-term profits. And then he came out, he's tried to push oil and gas prices down as well. And a couple more interesting, and that was kind of a big shock as well. And then he's also stated that he wanted to see. He came out and said that they want to sit there with executive orders or something, and they want to stop corporations from buying houses. I mean, it seems like he's been listening to the Max Out Savings Show. We've been pointing out the problems of corporations owning homes. Look, China has a higher percentage of people owning their homes than the United States of America. Think about that. I mean, that's a scary thought. Now, to be fair, on one side you have Larry Fink at BlackRock who pronounced that you'll own nothing and love it. Now, keep in mind, Larry Fink is head of what the World Economic Forum, Davos. He's also controls the biggest bond manager in the world, BlackRock. And so, look. Nobody in the United States wants to live in Larry Fink's world. And so in that case, they'd rather live in China's world where they actually own something. And so BlackRock has been buying, Blackstone has been buying, other ones have been buying. Now they've spun off some of the things, but they've been buying up homes. And now they will tell you, the Wall Street Journal's running cover for them today saying that, well, look, the companies that own over 1,000 homes are only 1% of the market. Well, if you knock it down to, say, 100 homes, it's a pretty big percentage, or 50 homes. And candidly, people shouldn't have to own, they maybe own a home, a vacation home, or they buy a home, then they move to a bigger home and rent it out, maybe 2 or 3 homes, but that should be it. Maybe you set the limit at 10 or 15 homes if you want some investors, but you cap it. And you stop it, because it's not that. A couple things. They're saying, well, it's just 1%. They're not doing anything. But what they're not saying is, we had a client talk to us. They had a friend up in Nashville. Their son is trying to buy a home up there. All the big, as Nashville was booming, all the big private equity and the big corporations were snapping up homes to rent them out. So they were buying a much bigger percentage in Nashville so people couldn't get into the market. The other thing that people won't tell you is, and we've had some young people tell us this, they're like, look, I was trying to buy a home, and I get my financing and everything, and I put an offer in, and then this corporation comes in and says we'll pay cash and close in 10 days or 2 weeks. Well, the person selling goes, well, this young guy or this young couple, they're trying to buy a home, but this corporation's a sure thing. I'm going to take the sure thing, and so these guys need to get out of the market, and the way to handle this is through the executive orders, which is the bully pulpit. Remember, that's what Teddy Roosevelt, the bully pulpit. So you get up there and you start, you want to sit there and shame these big corporations, but it has to go to Congress. Congress should sit there and put limits on what they can do. They should also, anyone over a certain percent number of homes, they should strip them of their tax advantages, so these people ultimately get out. Now, maybe you can give them kind of a window to get out or something. They lose 10% a year of the tax advantages over the next 10 years. Because we want people out. We want them selling homes to that young couple that's trying to get into the market. We don't want them buying up more homes and competing with that young couple. This is a really big thing, and I'm really pleased to see he's doing it. The second thing that came out late this week, which is another big deal, is President Trump wants to cap credit card rates at 10%. We've had the banks, in many cases, paying zero interest on a lot of checking accounts, or they're paying 2 or 3% interest, and then they're lending out the same money on credit cards to, again, younger families typically, or people getting out. They're paying 15, 20, 25, 30% or more on credit card debt. And I give you an interesting statistic. You know where the airlines are making most of their money? It's on the business class seats, first class seats, and it's also on their credit cards. That's where they're making all the credit cards. And so this has become a big racket in this country. Not only it's the only business. I get calls all the time. The phone rings. Yeah, this is Max Out Savings. Yes, sir. This is Abib or whatever from India. We'd like to lend you money. How much money do you need? We can get you money. They want to lend me money. Typically it's a lot less than 25%. Rest assured. Well, they're having to pay people. The credit card companies, think about it. They're charging the retailer 2 or 3% on it, which is increasing the cost of the product, and then the person borrowing it is paying 25% on the card. It's ridiculous. And so now, do I think the limit should be 10%? No, but I think it needs to be capped at possibly 20% or less. And look, if people, they don't need to be lending money out to people at 30%. Again, it's important for the Republican Party to show that they're for working people and they're for the young people in this country that are having an awful hard time setting up their life, building up assets, and positioning themselves for retirement in the future. Everything is stacked against them. High credit cards. Oh, when I first got out of college, inflation was about 7% or something, and credit card rates were 15%, and money markets were 5 or 6, 7%, and it wasn't it was like 14% or something. And since then, the credit card rates have gone up, and the cost of money has gone down. And the credit card companies have been remarkably good at co-opting Congress. So I think it's important that Trump's talk about the credit card, about the home ownership and big corporations and the credit card, Congress needs to sit there and pass. They need to start doing something. Congress, for all practical purposes, sometimes I wonder if we should just dismantle it, make a powerful presidency, and then have the courts kind of moderate it, because it doesn't seem like Congress is capable of doing anything. Look, how hard is it to sit there and pass a thing limiting corporations from buying houses? You talk to the Republicans, oh, I'm sorry, there's not enough vote for it. You go over to the Democratic side, there's going to be a whole ton of votes over for that. Same thing with capping the credit card debt. There's a whole lot of Republicans and there's a whole lot of Democrats that will support this, and they should get together and push back on this, because if the conservatives don't look like they care about young people in this country, we're going to lose this. And McDonald, or whatever the hell his name is, up in New York, he's going to come up with something, and people can go, well, I'm going to go with that guy. And I think it's really good to see Trump doing this type of stuff, but Congress needs to act to put some teeth into some of the stuff Trump is doing. And honestly, it's not that hard to come up with a simple bill of some type with some of this stuff to cap credit card rates, not at 10%, but at a reasonable amount. And it's not that hard to strip corporations of the profits from owning individual homes. We want individual homes owned by homeowners that are going to take care of their homes and have a vested interest in their property and building up wealth in the United States. Anyway, I'm sorry about that rant, but we've talked about this show on these things endlessly over time, and it's good that things are finally starting to work this way. I hear it from our clients. I hear it from talking about their kids. I hear it from my kids. It's like we're being ripped off. This isn't fair. One of them tried to buy a house and someone swooped in, a corporate swooped in. I mean, I hear this all the time, and it's time for things to change. We'll be right back, and they're starting to, right here on the Max Out Savings Show.
The Max Out Savings Show with Ted Gioka will return shortly. To speak with Ted Gioka now, call 713-339-1070. Back in a moment with the Max Out Savings Show.
Hi, this is Ted Gioka of the Max Out Savings Show. Our motto and philosophy is to save aggressively and invest conservatively. The world is changing at a faster rate than any time in the last 50 years. The investment world has changed. Have you changed? Inflation will destroy your retirement. It is a different world that requires different strategies and ideas. The era of indexing and investing is over. If you need help, listen to the Max Out Savings Show. Our show airs every Saturday at 10 a.m. and Sunday. We talk about investments, the world, and where the world is going today, and help you understand it and help you save money and build up wealth. It's the Max Out Savings Show. And if you need some help, go to our website, maxoutsavings.com. That's maxoutsavings.com. On the website, you can sign up for the free Max Out Savings Report. Our report covers all types of these big issues, the changes in the world, and helps you understand and protect your retirement. So go to the website, maxoutsavings.com.
Hi, I'm Sam Malone, the owner of Houston's cutting-edge media company called 512 New Media. At 512 New Media, we create amazing videos that companies use on their websites, telling their story in bold colors with exciting animation and graphics. At 512 New Media, we also shoot television commercials and instructional videos. And if you want to show off your business from the air, we're ready to go with our drone video aircraft. Let us help you create your media message. We're online at 512newmedia.com or call 281-822-8803. 512 New Media is Houston's only media creation and distribution company that's actually owned by someone who's currently on the air. And that gives us an incredible edge when creating content for consumers to use on their laptops, tablets, and smartphones. Standing by to create your message, we're 512 New Media, 512newmedia.com.
In the 1970s, the big song was the Bee Gees' Stayed Alive. Well, it was difficult back then to stay alive if you were a retiree. Inflation was running rampant, and since then, over the last 25 years, it's gone away. Well, inflation's coming back, and it's going to endanger your retirement. If you're a retiree, inflation is your biggest enemy. Hi, this is Ted Gioka of the Max Out Savings Show. If you need help with your retirement, I'd like to help you out. Go to maxoutsavings.com. That's maxoutsavings.com, and we'll show you how you manage through inflation. Don't let inflation destroy your retirement.
And now, more of the Max Out Savings Show with Ted Gioka.
Welcome back to the Max Out Savings Show. We're just talking about some of the things. I do think, again, we have a big congressional election coming up. And as we said a couple of weeks back, about a month or so back on the show, we said, look, President Trump is going to have to be more populist. And I think you're starting to see it. Just this week, he wants to limit corporations owning homes. He wants to he wants to set a credit card debt at a maximum of 10%. And again, I don't think that's going to happen, but I do think they could see some type of cap on credit card interest, which is just out of control. And they're taking advantage of people is what they're generally doing. And so I do think, and I think there's a lot of support for this in Congress. And by the way, one thing the banks and the other people should figure out on this is you're better off getting a deal now than waiting around and let the Democrats get in. It's going to be a much worse deal. Things have to it's going to be much more populous here. And so this is something we want to watch. One other thing, one thing we didn't talk about on the Max Out Savings Report is I do believe the dollar is going to be stronger. The U.S. is trying to cut their deficit. We have to see what's going to happen with the tariffs in the Supreme Court, but we're working to cut our deficits. We're getting good growth. We have the Doge Commission, which got about $250 billion worth of cuts coming in. So our situation is improving. We're likely to have. I don't think the market really understands. We're going to have a reasonably good economy this year, and so these are all kind of positives, but I do think that the markets, they're going up now, but I think it's going to have a much more volatile year in the markets this year, and so this is something I think we want to kind of continue to watch and see, because we still like the precious metals. We just had a phenomenal last year. Precious metals was one of the big things. We actually did quite a bit. I mean, things really worked all over the place for us. But I think you're going to continue to see the precious metals stay strong. There's still a lot of uncertainty out there. Most countries around the world, the Chinese are printing money, the Europeans are printing money, the Americans are printing money. There's a lot of pressure on the Fed to keep rates lower, and that's going to be positive for the precious metals. For commodities, copper's hitting a new high. Again, massive demand for defense work, massive demand for AI, massive demand for electricity, grid build-out, copper, aluminum, silver, solar, all these things. You still have this really thing. And commodities have really been underpriced. We had this big surge of inflation from starting 2020 on. Keep in mind, it got close to 9% 1 month. And if you look, it's been about a 30% increase in prices in many things, and that's on top of a steady, slow build over the last 10 or 20 years of inflation, and many of the commodities haven't really gone anywhere. So I think you're still going to see the commodity sector do well in this world, and so I think this is something you want to kind of watch and see. I think for 2026 you do want to have higher levels of cash as well, because I think you're going to get a lot of volatility. This market has run up nicely year to date, and I've seen this. The market would go up kind of at the beginning of the year and then sort of fall apart later on, and I think that could be kind of what we see here. I think we could see a good January, maybe February, then a sell-off or something, or, a hot January, then a sell-off. But I do think there's just too many things. What's going to happen with China? What's going to happen with Iran? What's going to happen with the Supreme Court? What's going to happen with interest rates? There's just too many things. Is AI for real? Are all these guys going to win or not? And type of thing out there. And you look at the concentration in this market. I think the top 10 stocks are about 30%, 39% of the S&P 500, 40%. They were over 50% of the return last year in the market. So it's a very concentrated market, and these guys have gone all in with massive amounts of AI spending, which at best case means their earnings are going to slow down over the next couple of years. And more importantly is the build out is so expensive they're having to cut back their stock buyback programs. If you really look at it, when it became clear back in August, September, particularly September, the true amount of the AI spending, that's when those stocks started to underperform, and I think they're cutting back their stock buyback programs as well. And so I don't think the AI is going to be the play this year or the stocks. I think it's going to be industrial type of situations. I think you're going to have to be very clear and really watch out because there's a lot of overvaluation in the market, and that's the real danger in here. And enormous amount of leverage. Something we'll see. Another thing that I talked about the dollar being stronger, actually, and I didn't mention that, but also I think the euro could be one of the weaker currencies next year. Europe has real problems. They basically they got rid of particularly Germany got rid of their coal-fired plants. They got rid of their nuclear plants, which was all their cheap electricity. Now they have some of the highest energy costs in the world. They kicked out the Russians, which were giving them cheap natural gas, and instead importing LNG, which is expensive, which means a lot of their industrial base is, quite frankly, unprofitable because the energy costs are so high. They have naturally high labor costs, but then we couple that with the highest energy, and it's basically they're in the same place Ohio was, in 1995. I mean, it's just they're in real trouble. Their entitlements are out of control. They flooded the place with illegal immigrants, and it just seems to be complete chaos. And so they're all starting to spend more money. I think. Does the money want to bet on the United States and Donald Trump, or you want to bet in Europe? I mean, I can see people wanting to bet on China, but Europe is just a basket case. So I think the euro could sell off, and that's going to be bullish for precious metals, I think. And so that's just another thing we want to kind of look at and watch out for the year. The S&P. Well, it'll be interesting what happens in the next couple of days. The S&P finally broke out really Friday. Yesterday it broke out above the old high that's been the high. So it's kind of a new high here, and so we'll just sort of watch that and kind of see where that goes. We're really trying to just find value in the market as our strategy. Home building, I think, is going to start recovering this year. I think they're going to try to come up with some more maybe subsidies to help out home building. The home buildings stocks really have taken off here recently. We like more the lumber, the owners of the timberland. Some of the timber REITs, we really like those. You get a really good dividend. You own the land underneath it, so it goes up with inflation over time, and the timber grows about. If you get the growth in the land and the timber, it's about a 7-8% growth rate on it over the long term. And the interesting thing is many of these timber REITs, they own a lot of land in Alabama, Georgia, South Carolina, Florida. Well, these are all big growth areas. And so if some of their parcels of land are in areas that are pretty useful for subdivisions or plants and things like that, so they can sell them at big profits. And timberland is pretty reasonable. I haven't looked at it in the last year or two, but it's not unusual for timberland to be selling for $2,000-3,000 an acre. And if you just go over and price land, I mean, the $2,000 an acre, that gets you basically a bunch of land out in West Texas somewhere with no oil rights under it. It's basically in the desert, and so it's very cheap. Land is very cheap on the East Coast compared to Texas. And I think you could also see some kind of arbitrage type of situation there. So the timber REITs look really interesting in here. They've had a big move up. Even look at Lanier. Lanier was actually up 8%. 8.9%. And one of the reasons is a couple things. President Trump says, "Hey, I'm going to sit there and we're going to stop big corporations from buying single-family homes." In addition, he instructed Fannie Mae to start buying longer-term mortgages to push down mortgage rates. And so, again, that's helping out. Again, what you want to do is you want to encourage ownership. You know, the central tenet. I was watching this thing from Kevin Costner on the West last night that's on TV, and he's talking about the movement out. You know, they opened up the Louisiana Purchase, and which was just extraordinary. And so people started moving out there. Well, they moved out there. There was Indian country. There's nothing. They moved out there because they wanted to own something themselves. His people had nothing. Many of them came from Europe. I remember on one of those shows, I think it was Yellowstone or one of them, the precursor to Yellowstone, I think, where you know people are, you know, it's hot. They've been driving all day. They're wagon trains, and so they get off and the cowboys jump in the river and they're swimming around. But the immigrants, they're afraid they're not going in the water. Like, why aren't these Germans getting in the water? And they go, well, in Germany you had to have the permission of the king or of you know whoever's running the place to actually swim in the river. I mean, so the idea of ownership, that's why all these immigrants come here, they actually want to own something. And so we want people owning homes. And so President Trump is doing something. This is exciting. And again, this is something we have talked about on this show for years, and it's good to see things are finally shifting over. And so I think that the home ownership thing is going to be a theme for this year that should do well. It's going to take time. And so this is something to watch. But again, a very volatile year, and you're going to have to be very specific. I think as I've been saying, the era of indexing is over. I said that last year, and actually indexing did well. We beat the indexes handedly in our accounts. But it was just because they ran up these big tech stocks. And I think that there's too much concentration in that sector. And I think you're going to have to be much, much more targeted and have a much better risk plan in place for 2026. But a couple of things. If you need some help, go to our website, maxoutsavings.com. You can sign up for our free newsletter. It's free. We don't send anything out except the newsletter. We talk about all these really exciting things, try to get you ahead of what other people are talking about and bring them to you. And if you need some help with your retirement, you're retiring, you have an old 401k plan or a trust you need help with, we'll show you how we manage money using our value investing approach to the stock and bond markets. We hold the assets at Charles Schwab. So if you need some help, just go to the website. You can request a meeting with me. I'll sit down with you. Just email us or give us a call. We'll set up a meeting. We're here in Houston, Texas, and I'd like to help you out if I can. And by the way, also included in that, and this is for our clients and listeners always, you can call us anytime. We're happy to give you advice on, what to do, houses, or anything financial. We're here to help out. So if you need some help, go to the website, maxoutsavings.com. And remember our motto and philosophy, which is to save aggressively and invest conservatively. Save aggressively, invest conservatively. That, my friends, is the key to building up wealth over the long term. If you're not saving enough money, start of the year, now's the time to do it. I hope everyone has a great weekend. We'll see you next week right here on the Max Out Savings Show.
This has been the Max Out Savings Show with Ted Gioka, a presentation of Max Out Savings Advisors. Join us next Saturday at 10 a.m. for the Max Out Savings Show with Ted Gioka on AM 1070. The Answer.